Hi everyone, in this video I'm going to be telling you the city, the capital city that has the highest demand and that will grow the fastest over the next 6 months from a percentage perspective. And so if you're thinking, where should I invest? If you're in Brisbane, Melbourne and Sydney, or anywhere around Australia and you're thinking, where should I buy my first or next investment property? This video will tell you a lot so you can make that decision in a data-driven way. My name's PK and I help build people passive income without dropping $15,000 on a buyer's agent every single time using data like what you see in front of you. We'll be going through that for the rest of the video. But guys, if you enjoy these videos, hit the subscribe button, turn the notification bell on, give it a like, right? This channel exists to help you get ahead through Australian real estate. So if you do want to get ahead through Australian real estate, hit the subscribe button right now. Okay, let's go through this. It's super interesting, guys. So this CoreLogic data, point in time, this is like basically right now. So capital city median time on market and median vendor discounting. What does that mean? So in my course, in week 2 module, the heart of the course, we go through this suburb by suburb, giving you a decision making scheme, a metrics driven proven process. You can go down to suburb level. Today we'll be going down to city level, but here it is, time on market. What that means is how long does it take from listing to contracts exchanged, how quickly are houses being sold, and median vendor discounting just means how much do vendors need to discount, how much do sellers need to discount on a percentage basis their property in order to be able to sell it. So these are two really interesting demand side metrics. Don't get me wrong, there are so many other metrics that you need to learn, that you need to be understanding down to suburb level, but these give you some indication at least, right? So let's go through it. Which is the best city? My key takeaways, right? Let's just go through it. So capital city, Sydney. So here it's taking in Sydney right now 24 days on average to sell a property, from listing to sell. All right, so you can kind of scan down here that Melbourne, it's taking much longer. Melbourne is a much weaker property market. I've done other videos on that. Brisbane is much better than Melbourne, not as hot as Sydney. Adelaide. I mean, this is the really, if you could take away something from this video, is really to look at Adelaide if you're not been looking at it. I know so many of you think Adelaide, that kind of sleeping place. I don't want to invest in Adelaide. I want to invest in Melbourne. I want to invest in Sydney because that's where the jobs are. Guys, if you look at these stats, if you look at them over time as well, which we won't be able to do today, Adelaide, for me, next best thing, the data says demand is super high. Obviously, the lower amount of time on market, the more the demand. So Adelaide is just as hot as Sydney right now. Perth, not quite. Hobart is the hottest and has been the hottest for a long time. Darwin, prices have grown, but not as hot as the others. This is average aggregate stats. Obviously, markets within markets, suburbs within suburbs. This is not to say that there's no suburbs in Darwin that aren't growing. This is not to say that there's no suburbs in Perth that aren't growing. In fact, we've been buying in places in Perth, north and south, that have gone up $100,000 literally over the last 12 months. So this is aggregate data, but it still helps you to some extent. And then median vendor discounting. So in Sydney, vendors are not having to discount. In fact, they're able to get a 2.4% premium on average over what they thought they could get at what the listing price was. So it's a negative discount, which means a premium. Everywhere's got a negative discount, which means it's a premium. All right, if we looked at these stats 3 years ago, it would have been positive numbers. In other words, there's discounting going on. Right now, no discounting, but the most premiums are being achieved once again in Adelaide, right? All the other capital cities, NA just means the data's not reliable at the moment. All the other cities are basically the same. Adelaide, that's kind of where both of these numbers are stacking up really well. When it comes to data, don't just look at one metric. You need to look at 30 to 35 metrics. Just because 27 is strong doesn't mean that you should just go off and buy in Adelaide. You need to look at other metrics as well, like this, and in fact, many others at a suburb level. Ultimately, even in Adelaide, there are suburbs that I wouldn't touch, with a 10-foot pole. But my key takeaway from this is Adelaide, pretty strong. Now let's look at units. So by and large, units are still lagging. So time on market taking longer to sell. You can see in Melbourne taking almost 2 months to sell a unit. Same in Brisbane. I really wouldn't touch a unit still in Brisbane, even a townhouse for that matter. Darwin, huge. And so you can kind of see that houses are in much more demand if you look at these stats than units. And in particular, these more affordable areas like like Brisbane, like Adelaide, Perth is on the up as well. This is really where you should be thinking about investing. Forget investing in Sydney and Melbourne. You've missed it. You know, that boat has gone. These other cities haven't quite hit those straps just yet. And if I scroll down a little bit, I'll take you through this chart. So median time on market. So you can see houses versus units. Melbourne, you know, this is the same data, but just in graphical form. Adelaide is, you know, you can tell it's a great city or a strong property market when both units and houses show really strong data. Both units, the light purple and the dark purple for Adelaide, both are very strong, much like they are for Hobart. So you can see that Sydney, Adelaide, and Hobart are really the hottest markets right now, according to time on market. And when it comes to average vendor discounting, the hottest market, so we want this to be, you know, huge. We want that negative number to be huge, which means there's a huge premium. Once again, Adelaide, you know, takes the cake. Oh, Darwin's quite good here, but Darwin wasn't that great up here. So this is why you need to triangulate data. You need to look at even buyers. I can tell you most buyers agents, most property investment companies, all those people that try to sell you house and land packages, they have no idea about this type of data. It's all cold logic. It's not my data. Anyone can look at it. You need to know how to read it. So there are different weightings that we give to time on market versus average vendor discounting. But suffice to say, Adelaide is strong in both. Perth is improving. So it's, you know, it's getting better. The premiums are increasing now, and this time on market is starting to come down. If you look at this data last month, the previous month, so I have a lot of optimism for Perth. But right now, if you want to make $100,000 in the next 12 months, you know, Adelaide is the one that's the surest bet. Brisbane, if you look at the dark grey, you know, performing very well as well. If you're kind of looking at Melbourne, I just don't know why you'd buy in Melbourne. You won't be able to get positive cash flow properties. Neither can you in Sydney. So the cities across here that give you the strongest data and are also giving positive cash flow properties, and you can buy something under 500,000 are really Perth, Adelaide, and Brisbane, right? So if you have under $500,000 to spend, if you want to buy positive cash flow, Perth, Adelaide, Brisbane. Why am I not saying Hobart? Is because it's had its run. If we look at many other data factors that I teach, you know, you find that it's more at the top of the market than it is at the bottom, whereas that can't be said for somewhere like Perth. Of course, there's unlimited regional areas that, for me, is just as strong as Adelaide. We've done a lot of buying, probably bought 200 houses in Adelaide over the last 12 months. Those that were bought in January, February, March have already gone up $80,000, $90,000, $100,000. That will continue to happen for my clients and other people who buy in Adelaide now. You need to make sure you buy the right streets, the right pockets, the right suburbs, markets within markets within markets. This is high-level commentary, but hopefully it tells you at a high level where you should be looking. Guys, if this brought you value, hit the subscribe button, turn notification bell on. If you want to really improve or increase or enhance your learning, I'll leave some links below to my Facebook group. There's 10,000 people in there, investors, great community, my podcast as well, and my website if you want to take things the next level. Guys, the most important real estate is always these 6 inches between your two ears. The takeaway from this video: don't invest in Sydney, Melbourne. Go positive cash flow, buy sub $500,000 properties, even if you have a lot to spend, because you will be better off over the long term. Catch you later, guys. Bye.